This video is brought to you by the award-winning prop firm, Fidelcrest. Right folks, I thought I'd jump in here quickly before this video starts because it is a bit obscure in parts, right? So you're probably going to be thinking, what's going on here with this price chart and that he's showing me, just scrolling through it, what's going on? The key here is it's insight into what somebody has found that has made them a successful trader, and if you do spend enough time researching it, you should be able to make it work for yourself. Okay, so that's where it's positioned, just so you know, in case you're looking for a full-on strategy and here's how it works. This isn't it, but it is a very different view of how things work, and one that we haven't had on the channel very well, I think maybe once in the past. All right, folks, so without further ado, here we go. Let's introduce Scott and get on with the video. All right, folks, here we are on Trading Nut. We've got Scott Free in the house. Can't see his video, but we did shoot an awesome podcast, link below this one here earlier on. And today he's going to walk you through what you're not meant to see in the markets, what they don't want you to see in the markets, as well as some tools that are going to help you see it. So over to you, Scott. Hey folks, great news. My sponsor Fidelcrest are running their mega Christmas offer again until December 25th, 2022. You get 2 trading challenge accounts for the price of 1. Simply use promo code Xmas-2 for 1 at checkout, and to get started, simply click the link in the description.
So basically, I'm going to give a little bit of backstory so that you guys understand what is on my chart. So these red levels, these are the levels that I primarily trade long-term, my long-term strategies from. So these are the institutional levels that I was talking about in the interview. That are historical levels, and they are used for speculation time and time again. I have chosen 2 levels on all of the different majors here, and we're going to go through and have a look. And I also have these inner levels in between. So basically, these major levels are the backbone, and these inner levels are the more intricate system. And we're basically just going to have a look at how price reacts to these levels. Like, I'm not going to show you exactly what I do because it's so simple that if I showed you, you would be able to do it, like, you know, pretty quickly. Yeah, so why don't we just start? Yeah. Oh yeah, so we're starting with cable. The reason that I've chosen these 2 levels is because price recently made new all-time lows. I believe they're all-time lows, but they're new lows, and people might find it hard to believe, but I received these 2 levels, the 2 new levels from probably the most well-known investment bank. So these are like the most verified levels that I have access to. So I just want to follow price action and just see if these major levels are the backbone, and this is the intricate, detailed system in between, and people are speculating from these major levels only. You know, maybe these inner levels have some sort of value as well. Maybe the market isn't just doing random things. Maybe it's not trending up and down. Maybe it's just ranging in between levels. You know, let's just have a look at price action. And we're going to go through all the majors. Level to level. I mean, I just pretty much just wanted to just like show some things that are pretty undeniable, you know, like for people that are watching, it's like, just have a look, you know, these aren't round numbers, you know, they're not like, these are random specific prices.
And is there a way you sort of determine which, you know, it's easy to say level to level, but is there a way you can work out that that's the level that it's gonna end at?
Yeah, I could say that you can, but I'm not going to go into too much detail. I mean, I have small markings here on the side, right? I mean, obviously, like these levels, right? They're determined from a higher time frame, is what I will say. The higher the time frame, the better. But yeah, I mean, I don't want to give too much away, but I just sort of want to show, like, the difference between this and like what people are trying to make money from, or, you know. So let's go over to the euro and just have a look. So we break down first point of reaction here. Look at the trading. Trading's done around these levels. Just keep following price action.
So what are the key things that people should be looking out for at these levels here that you're identifying?
Well, I'd say reactions, like look for trading, trading done from these levels, trading done from the level here. We break the level here. There's retests, retests. This is pretty close here, trading down around the level. I mean, like, look, this is a high, right? And it's retested here, but the high came at the level, So that's how people can get confused.
And do you ever sort of like get to the point where you put the levels in and go, well, hang on a sec, after the first few touches, you're going, well, this isn't really looking like the level's correct?
Well,
does that ever happen?
Do you mean like if I'm drawing levels on a higher time frame?
Well, if you're drawing these levels in initially based on the red lines, right?
Yeah.
What if you get the red lines slightly wrong? Does that throw the levels off at all for you?
Well, yeah, that's a great question. So like when you're drawing these levels, right, and you're drawing them on a high time frame, it's easy to be off by like a few pips here and there. But as I said, like we're in a retail space and nothing is a perfect science. So you can get like basically like a few pips here and there. It doesn't really matter that much. Like as you can see, like sometimes we get perfect reactions like here and here and this level here, but like this is slightly exceeding that level. But it's close enough for you to be able to create some sort of system around something that is completely objective. Like, trading is just price. That's how trading is done on an institutional level for sure. So we're just going to keep going through.
So the demonstration here, folks, is really that these levels are essentially ranges that the people are trading within versus, mega trends or anything like that, which is just range to range.
For sure.
Kind of thing. Yeah.
Like we just keep having a look, price breaking down. I wanted to find some like real choppy sections. And if people think that I've just like cherry picked these levels or something, like go through my Instagram and you'll see that from the red levels, I've taken trades from most of these red levels. Some good examples.
So have you got a place you took a trade from that you could show us?
Yes, I most likely do. I took a trade from this zone right here. So it's on my Instagram. I took it from this level to this level. Very simple trade. Pretty decent risk reward.
Okay, right. So you did say at the end that, earlier on that you were looking at the major zones for your trades.
Yes, that's right.
Yeah. Okay.
So I think we got all the way through the euro, but as you can see, we've got some pretty good reactions here. Like if you have a look, like this is a good example where it's kind of like why did we retest there? Like why didn't we break the high or this high or maybe even this high down there? It's like we didn't make it. It's because of the price. It's just counterintuitive enough, to keep people confused. Not that that's necessarily the main motive for people.
And with this, I suppose, a simple kind of approach in terms of looking at the candles there, you could probably come up with a way to get into at that position. If you just said, I'm just going to take that bull, any one of those bulls really, and just have your stop below the level, you could have got a 3-to-1 trade there, if not more.
Absolutely. I mean, look, like if you look for liquidity being absorbed, so like sellers being absorbed or buyers being absorbed from a key price point, you can create a system. So if sellers or buyers are absorbed from a price point and you see people entering the market with wicks or bull bear candles, like you can make money because like a high percentage of the time that's going to be people actually entering the market. Like it is what you think it is. Also, another thing that I'll talk about is price moving straight through a level. If you're only using limits and stops, you can capitalize from that. The reason why price moves straight through a level is because it is to the level and through the level, right? Because we're just talking about price and value here. That's all the market is. So let's say price is below a level and some sort of economic data comes out, or there's an evaluation change on that currency. The trading for that valuation change is going to be done at the level, right? So that's where the orders come in. The orders don't come in down here. The orders come in at the level. Prices suck to the level and through the level. You know, like it's not always a high-low reversal when there's a valuation change. Like these are like the phantom trades that I feel like retail doesn't have access to. You know, because there's like, where's the opportunity for you to take a trade right there? You'd probably, yeah.
And so at that point, because I suppose you could look at it two ways. You could go, well, I'm going to go short there because there's a level, and is that?
Well,
and you're going to, you're obviously going to get stopped out.
Yeah, well, I mean, look, that's
part of your 33%, I suppose.
That's part of the 33,
yeah,
absolutely.
Yeah,
and also, I utilize hedging.
Yeah,
I try to take unbiased trades when I can. So we're going to have a look at the Aussie dollar as well, and just focus on the reactions that we get from these levels. You know, like the market is not always completely liquid, so it is not always perfect. But if you look in the liquid hours of the day, I mean, like, why is price reacting from this level in this zone? You know, like if we just have a look at this, it's like, what else is there to tell us that that's where it should react from, other than the level that I have on the chart there? So yeah, I mean, like, I guess for me, it's like I understand the significance of these levels. I'm not sure if other people will be able to understand it. I've traded them, I've backtested them. It's spooky. I was worried about coming on here and sharing this, as I said, because I wasn't sure, you know, like.
I think that the thing that people are probably going to be thinking here is like, well, this isn't really helping me because you're not telling me what to do. But I think, guys, you need to sort of go, what he's actually saying is these are levels that you probably aren't using. But he's now showing you these levels that you can go away, and if you go back to this video and possibly, you've got prices here on the side, you've got the levels drawn out. You could have a look at these levels if you draw them up on your charts, and see if there's a way you can ascertain how these are being generated.
For sure. I mean, look, that's like. That's a
or if you really want to know, I suppose there's Paul, Scott, and Andre that can help you as well.
Yeah,
so
sure.
if you really want to get into that level of detail. So yeah, just I suppose take your time to go through this, and like if this isn't for you, then fair enough. Just turn the video off and away you go. But these levels are something you could probably go back and have a look at, pause this, and then see the reactions and see if there's something that's valuable to you or not. But in the knowledge that, this is Scott's got a 33% win rate strategy on this. So they're not going to win all the time. But when they do, they're going to give, I think you were saying 8 was your average.
But I'm hedging the trades. So the winners, it's a higher percentage because
and when you say
each trade
hedging,
has a loss.
When you say hedging, can you give us an example of what that looks like? Because I couldn't quite get my head around how you were doing the hedge.
Well, it's so simple, and I wouldn't want to give too much away.
Oh, okay, so it's your own you come up with your own way to do the hedge.
No, I didn't come up with my own way to do the hedge. It was taught to me. It was definitely taught to me.
Okay. Because I know Paul was doing the hedge.
Yep.
So he hedges his stuff, and I don't know if he mentioned how he did it in the.
It's pretty much the most simple form. It's the most simple form of hedging that I do. It's like you don't try and figure out some like really difficult hedging technique. Like look up the simple forms of hedging and have a look at that. So basically, what I've done here is I'm on USD/JPY on the 1 minute chart, and I'm putting levels in between the smaller levels, and we can just have a look at how price is traded around those levels. I'm kind of predicting that people are going to find this sort of stuff like hard to believe. Like And I don't know if that's just because of my experience, with these levels and stuff, but
Yeah, it goes to show that, like, if you spend a bit of time on these things, they can resonate with you personally, and that's where you get your advantage.
yes, absolutely.
Now, if you were to draw these levels completely randomly on the chart,
Yeah.
do you think you'd still see similar kind of reactions? I suppose you wouldn't really, because
No.
you'd have a level through a range versus these ranges here. You can clearly see that they are within the levels, and they
Yes.
tend to break through a level to go to the next one, stay in that. I mean, there's the odd occasion where they're just hovering
Totally.
on the line,
Yeah.
but it's less, I suppose, than more. It's
Yeah,
usually
for
breaks
sure.
through. Yeah.
For sure. But it's not just like, oh, price breaks and retests the level and goes. It's like that's not the sort of like system that I think that you'd be wanting to create utilizing these sorts of things.
Yeah.
It's a little bit more detail, a little bit more experience, seeing what happens around these levels. You got to think about the time of the day. You got to think about what else is happening, around these levels.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Scott, that was fantastic. Thanks for showing us those levels and how active they are and reactive they are, and the wee chat. Now, look, I know it's not going to resonate with everyone because there wasn't any sort of specific strategy given here, but I think you've got to sort of have a look at this yourselves and take away what you can. So, what's the best way for the traders to get hold of you?
Yeah, just hit me up on _Scott-Free Instagram. That's 1T.
One T. And tell you what, folks, we will put a link to the podcast underneath this video. So you're going to see this video and the podcast on that page and the links as well, so you can quickly get to Scott's page over there on Instagram. Now, whilst you're clicking around there, hit subscribe, click like, and the notifications bell, click all, and we'll see you in a future video.